I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to Grain TV. My name is Cody Bills. Today is April 2nd. We had the market moving higher here today. We had the US dollar trading lower. Let's turn over to the grain hedge trading platform. See where we closed out the day. Corn trading up 6 1/4 cents to 358.5. Soybeans up 14.5 cents to 940.5. And wheat in Chicago up 18 cents here to 511 3/4. Awfully close to that 100-day moving average. We'll talk a little bit more about that when we move over to the charts and just see what today's price action did to the landscape. But before we get into that, let's look at the US dollar. The US dollar here, one of the main reasons why the grains were able to rally. We saw the US dollar come off pretty sharply. I think there's two reasons to that. One, we could have seen some long positions kind of evening up, getting out of those long positions before the ADP numbers out tomorrow. ADP numbers are typically viewed as an indicator for non-farm payrolls, so that's going to be something that's going to be impacting the outlook here for the U.S. economy. But really, I think one of the main reasons why we traded lower, just a more positive tone out of Greece. It looks like there could be some a new proposal here from the creditors that could resolve, at least temporarily, the Greek issues here. That's something we'll have to pay closer attention to, but it seems as though the Eurozone has a little bit better, a little bit more positive tone there for Greece. We also did see some inflation numbers out of the Eurozone, so that was also positive for them, and that helped the US dollar drop pretty sharply. Let's turn over to the wheat chart. You'll notice wheat rallying here, and I think wheat rallied because of the US dollar, but also in response to an announcement out of India that they are lowering their forecast for the monsoon this year to 88% of the long-term average here. And so when you get a monsoon that's at 90% or lower of the long-term average, those are typically considered drought years. So this is a big concern here for India. Could be a large concern for wheat and corn production. They're number 6 corn producer. When you look at wheat production, they're forecast in the last WASDE report to have 90 million metric tons of wheat production. That could be at significant risk here. They had a very wet May, a very wet April, but then it started to get dry and it started to get hot, just kind of zapping that soil moisture out, and now the monsoon is a bit delayed here. That is a big concern for India. It's going to be a story we're going to want to pay close attention to because it may start to change the fundamental supply and demand here of the global balance sheet. Guys, let's turn over to soybeans here because I think this is also another thing that we want to talk about. Soybeans kind of trading, bouncing off the lows of this downtrend that really started here late December. I think when you look at soybeans, when you look at the fundamentals, soybeans is really, I don't see a lot of positive news out there. The carry out for 2015, 2016 around 500 million bushels. That's significant. When you look at South America, their production, it seems to be being revised even higher. It seems recently in every forecast down there, it seems to be that the production continues to get revised higher. I don't see any major concerns in the U.S., possibly some concerns about delayed planting, but I don't see that as a major fundamental reason to rally this. I think what we're seeing here is a correction, a little bit of a retracement here in the downtrend that we've seen. So we could get a little bit more buying pressure here, but in general, when you look at soybeans on the long term, I think that it is still a very negative outlook for soybeans. I would not be surprised to see prices significantly lower from where they are today in a month or two. And that's something that we want to be paying attention to if we're producers. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about today, please give the office a call. The number is 877-472-4607. Remember, if you haven't done so already, Take a demo of our 14-day free trial. See what it's like to have live quotes in the palm of your hand, have a platform on your desktop, easily be able to manage the risk here on your farm when it comes to pricing grain. Thanks a lot for tuning in. We'll see you here on Wednesday.